Hi everyone, and welcome to this afternoon, well it's afternoon for us here in the UK, a webinar, day trading the indices, and we'll be looking at some commodities as well. Thank you for being so patient. As if you were with us for the previous webinar when we looked at Forex, you will know we've been having, or at least I've been having, some issues with my GoToWebinar. Apparently, I'm not in charge of the platform anymore. David has taken control. So anyway, other than the fact it wouldn't load either earlier on, didn't exactly help matters. Anyway, thank you for your patience. Good to be back on a more regular footing. I do apologise. The last few weeks, it's all been a bit up and down. Lots of reasons for it, not least the last week. David was very, very poorly with really bad flu. But we are back, and on a as I said, on a more regular schedule. Tuesday we do the London session, which is 8:30 London time, and that's Forex for the London Open. And then the Thursday we do two webinars. We do one at about lunchtime, just for Forex using Ninja, and then we have this session which we call the day trading session. But before we start, may I please draw your attention to the disclaimer that is on the screen. As you know, this can be a very risky business. Please don't even think of using money that you cannot afford to lose, and it's very important that I had that disclaimer up while I was talking. Now I'm going to move over to the next slide, and I've got a new system, as you can probably tell. I'm not terribly good at it because I keep missing things. David's laughing. Here we are, David and I, and obviously David is the one with the moustache, and we will be running this session together. And this session, as I said, is for day trading using a fantastic methodology that he and I have been using for almost 20 years, volume price analysis. And I know we have a lot of visitors to these webinars of traders and investors who've actually bought the book on Amazon, and we're really, really proud of the book and the fact that it's a bestseller, but much more important is that it has really made such a huge difference to the fortunes of so many traders and investors. And what we've done now is it's actually part of a box set on Kindle, because one of the questions I was always being asked is, well, you know, the principles are outlined in the book, but it would be nice to have some examples. And this is what we've come up with. We've called it actually stock trading and investing. But even if you don't look at stocks and you are a day trader, it's still worth considering the examples book, because there's over 200 worked examples, and there are examples of the indices and also commodities there as well. And to be honest, it really doesn't matter what the symbol on the chart is. The principles are identical, and this is why we've bundled it up as a box set. It is, when we call it a box set, it is just the digital version. And what we're also doing in this session is we use the NinjaTrader tools that we've developed to help us with our day trading for the NinjaTrader platform. We call it the essentials, and it's everything we believe you need to be able to day trade successfully. And as I said, we just happen to be looking at the indices and perhaps some commodities. And as an intraday trader, we have to use a combination of time charts and non-time based charts, and we'll explain as we go along, and you can actually see the charts for yourself. So I'm just going to come out of that for a second. It's been quite busy today because there's been a lot of data come through, delayed data from the holiday. First of all, the government shut down, and then the holiday day on Monday, which was a President's Day, and so there's been a bit of catch up. And we've also got the crude oil inventories later on today. Now I'm on Ninja 7, David is on Ninja 8. Before we come back and I explain what my workspace actually looks at and what is looking at and how I use it, I'm just going to pass over to David.
Thanks, darling, and a very warm welcome to you wherever you are in the world. Lovely to have you with us today, and if this is your first time, a warm welcome to you. I know we've got quite a lot of regulars in the room. I can see quite a few names I recognise there. So welcome to you. Welcome if you're new. If you are a first-time visitor to one of these sessions, we run as a two-hander, Anna and myself. As Anna said, she's on Ninja 7, I'm on Ninja 8. And if you do have any questions, please just drop them in the chat box. Always happy to answer them there. If they're more complicated, longer question, longer answer required, then we'll answer them on air for you. So I will pass back to Anna and we will get going.
With regard to what is happening in background, one of the things we always stress for forex traders is, yes, we do have to obviously consider what is the price action that we see on the chart, looking for potential trading opportunities. And when we come to trade an instrument such as an index, perhaps, or this is the YM, the ES, or the NQ, you would think, yes, we do have to look at the chart, but as we say in Forex, you have to look beyond, you have to look at the background, you have to look at not only the fundamental news, which we've had quite a lot today, but you also have to look at what is happening in related markets, and crucially these days also what is happening in the world of politics, because certainly for equities and the indices, it's really, market has taken it upon itself to decide that it's really all about whether there's going to be some agreement, a positive outcome to the trade talks that are going on at the moment between China and the US. And it also explains what happened on Friday, and we'll look at the daily chart in a little bit more detail for the YM and the price action and volume that we saw on that daily chart. We don't obviously have a candle for Monday because it was President's Day, but so which is why we have today's Thursday, Wednesday and Tuesday, and the price action on this Tuesday candle is really, I think, very significant, and yesterday's daily candle is also very significant as well. And we'll look at levels, important levels of support and resistance for the three indices. I've actually written at length about the indices and the levels to watch out for on my blog. So if you want to catch up on what I said, there's a couple of posts, one this week and one last week, before the market actually sort of, it seemed to take off on Friday, which is this candle here that we see. So I just put the crosshairs on it, you can see it a little bit better. Right, so that was Friday, and you've got a sort of widespread up candle with, well, I called it sort of what I call steady volume. And the week ended just before the holidays on a very positive note, and it was put down to Donald saying, making a comment about this March 1st deadline. The March 1st deadline is, if there's no agreement, if there's no agreement between China and the US, then the tariffs come into effect. If you remember, they called a sort of truce over this while they kind of try and work things out. And the market, what he said was, well, March 1st is not a magical date, and that was interpreted to mean, well, the whole thing could be kicked down the road, the can could be kicked down the road, you know, and it would all be implying that, you know, that it was going to be resolved eventually. The market took this as very positive, and as you can see here, the YM and all the indices ended up very positively, but the volume underneath it was, well, as I said, I described it as steady, certainly not quite what you would expect for a candle of that size, but we work with what we are given. Monday there was obviously no market, so we don't have a candle. And then we have this candle for Tuesday, which is a full trading session. And as a day trader, when you see a candle like this forming during the session, it's great because you know there are going to be plenty of trading opportunities. When you have a day like Tuesday, where you have this slither of price action with a lot of, as much volume under here as you have on that one, well, I would sort of say, would you say, David, that could be like the canary in the coal mine, as it were? Yeah. Because, and I know with VPA, it is very easy to be seduced, if you like, by one candle. You think of one candle, oh, great, that's the most fantastic signal, and jump on that one signal. We do have to, be patient and wait to see whether this is a huge anomaly, given the volume under there, and the price action under that candle. We have to wait to see what actually plays out. And in fact, yesterday it went up again. But look at the spread of the candle and look at the volume. That volume is almost as much as that volume, and the price moved that much. So we're moving into anomaly territory, as it were. So as VPA traders, we know something is afoot. Something's really not right. There's other sort of signals in the market that things may not be right. It could be wrong, you know, we'd never know. China and the US have maybe made some fantastic deal, and you know the sun will keep shining on the markets for some time to come. But as day traders, if you're trying to take points out of this market on a daily basis, what this is also telling you is, first of all, to beware that possibly we may be looking at some kind of pullback or correction, but also telling you that when you have this very, very narrow spread, albeit, you know, said with a lot of volume underneath it, trading is going to be that little bit more tricky, because you simply don't have the range. You don't have the luxury of having this nice big wide spread candle to be able to, you know, take trades both sides, up and down. So that is what this little collection of candles is telling us. Now, what I also said in my blog is, if you look at the longer term chart, certainly from a weekly perspective, that is the weekly candle from last week. And again, we have a wide candle. You know, it's not terribly impressive, to be honest. It's steady. What's positive for the YM is that it's broken away from the volume point of control. So, you know, you are in a positive uptrend, as it were. And it's certainly, but we're still not back at the highs of, is it 25, whenever it is, what here, 25,000. I can't read the thing here. But anyway, and what I said with the YM, it is making reasonable progress. And it's also went through this, take this off, this resistance here that we have here, this red line here at in the 25,000. You can see here that was a key resistance for the YM. Just very, very quickly, I know David's got the NQ was slightly different profile in terms of levels. This was last week's candle. It did actually manage to get through. It's around the just under the 7,000. 7,000 is an important level for the NQ, but it's facing another stiff test at 7,200. And I basically said the NQ's got it's going to have its work cut out if it's going to also achieve its all-time high. But let's go back to what is happening today. Go back to the YM, because we've seen some really nice price action on the day, certainly since the markets opened. Let's have a look on the daily chart. There we are. This is the daily candle, and just let's look at the Renko, and here we have the Renko, and this is the move down for the Renko. We can see here there's been some attempts to rise. The trend monitor has stayed really hasn't flickered out of its solid state of red, despite, you know, what the Renko does, it removes the sort of noise, if you like, at the live edge of the market. The trend dots, they did change to blue, just 3 of them. They went back to red. Here we have 2. They carried on down until it hit the volume point of control here at 25,840. So before we can have a reversal, this is the typical price action that you would see. You have a move lower, you have minor trends, minor pullbacks before the primary trend is re-established, and then you move into a congestion phase. It's really very, very classic price action, and you can see that more clearly on the time chart here. As usual, you had the usual volatility coming in when the markets opened. You had the usual trap where you had the down move, the reversal back into the spread of the candle. Now you see that happening. What do? Well, what you have to wait, as we say all the time, you have to wait until price either breaks below the low or goes above the high, and in this case it did actually break below. We've seen sort of attempts to rise here. We've got buying coming in from the wick, you can see at the wicks of below to the wicks of the candles. We've got this very nice hammer candle here. Again, one candle. It's so easy. There was buying coming in there. Then we have more, not so much there because the volume is actually falling away. This is stopping volume. Then we had these wicks, but you can see the volume falling under this. We had this candle here, obviously price support coming here. This is the one that's key. You've got to pivot, hammer, you think, oh great, it's now, are we looking for a reversal? In fact, we are still in congestion, and this is what I'm trying to say is VPA can give you these fabulous signals, but you do have to be a little bit patient. We were guilty of it when we first started. We saw a signal and we jumped on it and we think, ah, fantastic. And you're probably going to be proved right, but sometimes it will, you know, in your eagerness to take a trade, you'll either be stopped out or could simply be, you know, you could simply be wrong. So you do have to be a little bit patient. Now, what I also have on this workspace, I have the 15-minute chart for some context. And what I also did here, let me just change this here to a minutes, because this is Globex. What is a very good idea, I think. Let's go back to minutes and actually change it to a 480, which is an 8-hour chart. Let me just change the number of days, because it gives you an idea of what has happened in the, as I said, it breaks it into 8 hours, so you've got 3 sessions basically with Globex. So let me just see if that matters. Have a look. There we are. That's updated very quickly. Here we are. Obviously, the taller candles are where the physical market comes in, and we have, you know, New York, and we have, as I said, the most traders participating. It doesn't invalidate VPA, but what it does, it tells you, in a very, you know, a quick way you can see at a glance what has been happening in Globex thus far. And as I said, you can see the indices were starting to sell off, and we'll see whether that is going to carry on lower. So just a suggestion. What I also have here is I have a yen index, because the yen is although this is for day trading, Forex, all the markets are connected. You really need to know what the yen is up to. If the yen is being bought, it's a bit patchy as on the way up. This is the 3-minute. Let's just change it up to the 10-minute chart maybe. If the yen is being bought, as it is here, you know indices, the market is in risk off, the indices will be falling basically, and equities will be falling. If the yen is if they start to sell off the yen, you know that market mood and sentiment is changing. And I've also got one of our CSI indicators here, which actually shows the line. This is the magenta line for the yen, the point at which it is likely to roll over. So, you know, although we are day trading, we're looking at the indices, we still have to be aware of obviously the fundamentals, the broader market sentiment as expressed through a yen index, and certainly through the yen currency itself. So that's what I've got to say about the YM. Do you want to pass over to you, David? Are you on the YM, or are you looking at the NQ? Right, David is on the ES at the moment. I'm just going to hold on and see whether this is actually going to offer a potential reversal. We can see there's a nice strong base here around the volume point of control. I look at my yen. In fact, let me just let's have a look. Here we are. I'm just going to follow this magenta line. I've got it on the 5-minute. I might even take it down to the 3, because what I want to see that yen roll over. It's already begun to roll over here. I'm not really interested in the other currencies at the moment. I just want to see what the yen is doing, because that is also going to give me some confidence that some positive sentiment is going to come into this market. As for what my entry is going to be, well, there was a kind of potential entry here. This actually went to bright blue, but it actually came to naught, and it sort of the YM came back to this sort of broad support level here, well, around the volume point of control. It's actually gone back to red. So as I said, it really is a matter of being patient and waiting. And back to the time chart, again, based on this, attempt to rise, it's really just going sideways at the moment, which is a bit disappointing, but we'll have to wait and see. I certainly don't want it to be the slither of price action that we had on Tuesday.
All right, just going to change screens, switch over to my side. Hopefully that's coming up on your screen any second now. And I've just started off with a collection of time-based charts. This is the actually, let me go to another workspace. This is basically the YM, the ES, and the NQ, all on the same time frame, all running on a 5-minute chart. And I've mentioned it several times before, many times before in these sessions, but when you're trading an index, it's always handy to have the other two up somewhere else. It just either confirms or gives you a slightly different perspective on the price action. They're not always identical. They do vary from time to time. You'll get slightly different profiles, slightly different price action, but it just helps to really confirm what it is you're doing on your particular index vis-a-vis what's going on in terms of the other two, or these two in particular at any rate. And down at the bottom, I've got the daily charts, which just reflect what Anna was saying in terms of the YM, but the other two are pretty much the same. Let's just go back onto a single instrument workspace, which is this one. Now we're just down to the ES, just basically on the various time frames. So we've got 3-minute top left, 5-minute in the middle, 10-minute on the right, and down to the slower 30-minute down here bottom left. And then over here we've got the daily for the ES. And in the middle I've got the Renko running on a 7 brick at the moment. Which is basically 1 3/4 points for that particular index. And that's automatically generated. It's the optimal setting right now. It's the Renko optimizer. We just click on the time frame. I've selected a minute, and that's the optimal time for optimal brick size running at the market at the moment. I can tell you the market is pretty sluggish because we'll hop over onto the tick charts in a minute, but the tick speeds are running pretty low and oscillating with quite a lot of red on the tick speedometer. So it's just telling us that the markets are in congestion, tick activity is low, and that's really confirmed with both the time charts and also the non-time based charts of the tick. As we can see here, we've got the volume point of control. It's trading around this level on all three. So it's no surprise we've got congestion. It's really confirmed also by the fact that if we go up onto the slightly slower time frame of 10-minute, we had the volatility triggered here in the second or third candle of the session, and we're now trading around the spread of that candle. And until we move away from that, either to the upside or the downside, it's a question of waiting and being patient for the market to break away, and to break away with some sustained volume to confirm any move. And that applies whether you're trading the 1 minute or the 3 minute, 5 minute, whatever it may be. The trend monitor here is steadfastly red for the time being. There's no flicker of change in any of the time frames, and that's really confirmed right the way down to the 30-minute. And again, another confirming factor, we had the volatility triggered on this candle. We're still trading in the spread of that particular candle. We haven't moved away. Any move below, let's say 27.68 to the downside, that will suggest that we're going to break away to the downside, provided volumes confirming that on the faster time frames. And as you can see here, the trend monitor, we were in bright blue in the uptrend. Then we went into the transitional. This is classic transitional change, into darker blue, into darker red, and then confirming the sentiment of the reversal in trend. So we've gone straight from primary into our transitional colors and out the other side into primary downtrend, reversing away from that particular move. Still trading around those levels. Let's go and have a look at the tick charts. Just have a quick look at, see what the yen's up to. Just hop onto this workspace. This is the yen. This is on 15. So we've still got buying of the yen and selling of risk currencies Aussie. So we've got Aussie yen, which is on the decline at the moment. Flick back to the 5. Just starting to roll over on 5. The Aussie is just starting to pick up. If that develops into a decent trend, then we should see some movement in terms of indices to the upside, provided that selling of the yen continues. But it certainly hasn't started on 15 as of yet. So there may be more potential upside to the yen to come. If we just head back to the index itself, which I've got here, this is what we're seeing. We've got 5 minute across the piece. We've got 5 minute here on left on yen index. The center one is the dollar index, and over on the right we've got the euro. So this is what we've been seeing so far in the session. It's not dramatic, the buying of the yen, but it's enough to drive indices lower. And now what we want to see, if that is to be reflected in terms of sentiment, we want to see this roll over and a move to the downside if indices are likely to pick up any bullish momentum as a result. So again, this is in congestion. It's a question of being patient and waiting for that to develop. If indeed it does, may end up as a slither day, as Anna said. Let's go to the tick speed for a moment. Just have a look at the tick count here. This tick count here is a 1 minute time frame, a 3 minute time frame, and a 5 minute time frame on the tick speedometer. And what the tick speedometer is doing is many things, but one of the things it's showing you graphically and instantly is that the tick count, the activity is low. Where this is red, is telling you that there's a lack of activity, lack of participation. It is very low, and I can tell you that it is low because normally for the ES, which is the most heavily traded index of all, these numbers here, this is at 4,000, this is at 4,000, 3.5. These should be into double figures, so these should be 10,000 plus. This should be 6, 7, 8,000, and this can go up to 20,000 at times, depending on how much activity there is in the market. So it's pretty sluggish right now. That's what you're seeing graphically on the tick speedometer, not only the optimal setting up here or this one, either. This is the actual, this is the closest to the actual using a mathematical method of Fibonacci. It's not related to Fibonacci other than it just gives us a mathematical means of arriving at the closest number to the actual. It just means it doesn't change so frequently. So when you set your tick charts up, you're not changing them all the time. Rule of thumb, when I'm trading outside of these markets, just on Globex itself, when it's trading in isolation, I'll tend to use the actual. When I'm trading on the exchange and Globex running in parallel, when it's more volatile, then I'll tend to use this number here because it changes less frequently. I don't have to change the chart settings. And that's the biggest issue that trading on tick charts has, in knowing what to set that to, because either it's guesswork or you've heard it from somebody else. With the tick speedometer, it's delivered automatically for you and you set your charts accordingly. So you're trading at the optimal speed of the market all the time, because this changes all the time. It's not one setting, it's not one size fits all. It will change dynamically throughout the session. It'll be busy at certain times, it'll slow down, speed up, does it all day long. You have to be aware of that as an intraday trader. Let's just go back to the time charts. Seems to be a bit of bullish momentum attempting to come into the market. Probably reflected on the yen. Let's go and have a quick look at the yen while that's working its way through. There we go. It's flattening off. It was here when we came back last time. Now it's starting to kick a little bit lower on 15, and probably if we look at 5, it's already on the way down. Yeah, there we go. It's starting to decline quite strongly. Not really reflected in the Aussie, so this is really just a little bit of yen selling to really get some strength in that move. You want to see the Aussie moving up, but then the Aussie's been under pressure for different fundamental reasons, not so much related to risk, but much more related to export markets and China and coal. So it's taken a hit through local issues rather than its normal currency risk as a proxy for risk with the yen. Let's just go back to the time charts again. See what we're doing. No great strength in that move. Let's just pop that up and have a look at the volume under it. It's okay. That's in agreement. There's no anomaly there. We've got a little bit of rising volume, but until we start to break away through some of these pretty strong regions, these lines on here are on the accumulation distribution indicator, which is, it calculates and displays support and resistance from a price perspective. On the volume point of control, where you're looking at this histogram of volume, of which the yellow line is the volume point of control, in other words, the fulcrum of the market where price is in agreement, which is exactly what we're seeing right now. What the accumulation and distribution does, it delivers price-based support and resistance. So as you can see here, we've got a pretty deep level here. This dash blue line is quite wide, so we know it's pretty dense there. So if the market does manage to break to this level here, which is not far above, it's only, what, 4 points or so, then that's going to be a key level. And if it were to break through there, then we've got yet another level here and a further level here. So there's an awful lot of price-based resistance which is going to come into play should the market try and rally. In addition to that, we've got this heap of volume that's got to battle its way through. Once it gets through this level, then it's much clearer. There's very light resistance overhead in terms of price and very thin volume in this region. So I'll just move the chat box out of the way, apologies. If it does get up to that sort of level, then you've got a decent area of clear water here between 27.84 and 88, which is 4 points. The question you've always got to ask yourself, and which is answered by the chart, is that enough for me? Is that sufficient? For example, if you decided to take a position as we broke through this region here to 27.77, then is this move risk? Is it high risk? Is it low risk? We've got a lot of volume in here. We've also got price resistance in here. Do I want to take that position? Does that give me enough return for the amount of risk I'm putting on the table? It may do, it may not. You have to answer that question. If it breaks through this level, is this enough? We've only got 2 points here before we run into yet more trouble. If we get through that level, is this good for us? This is a lower risk opportunity because we've got very light price resistance and very light volume as well. So of the three, this is the highest risk, this is probably slightly less risk, and this is the lowest risk of all. And that's really just the way of looking at a chart, looking at what it's conveying to you, and then making a judgment call on whether you're comfortable taking that risk or not. And if you're not, you don't take it and just wait for the next one to appear. But it's using the chart and the information on the chart to give you the information you need to make a decision about taking a trade in the market. It's not about, oh, well, I need a 3 to 1, 4 to 1, 2 to 1, whatever it may be, that sort of nonsense. It's about looking at the chart and interpreting what it is telling you and what the opportunity for that position may deliver or may not, and whether there are likely to be any barriers to a clean move through that particular price region you are considering. Let's take that up there. Drop that back down again.
Do you want to pop up the YM? Because that looks quite interesting.
Yeah. Let's just go over to the other workspace. Anna said, let's just pop up the YN. There we go. Let's just pop that up. I've got that on 3 minute, but I can change that to anything else. And again, you can see this level here is acting as price support. So it's acting as a platform. It's helping to keep the price action above at the moment and containing it around the volume point of control. Obviously, of course, if that's breached, then it becomes resistance, and it gives you another level against which to consider where you might get in if you're considering getting in once a particular level has been approached and breached. Did you want it on a particular time frame?
No, I just thought it was.
Yeah.
I was just sort of whether it was actually finally going to. What does your Renko look like?
Let's have a look at the Renko. Pop that back down. Let's go back to this one. There we go. I've got this is the ES on Renko. And the indicator is working exactly the same way. I haven't got. I can change it to the YM. Do you want me to change it? Just change that over to the YM. Just pop it down there for a minute. That's it. Let's change that to a minute. Let's go for a minute on that one. Open that. Let's come up with 14 point on the YM. And what the optimizer does, obviously, depending on which instrument it's attached to, it will deliver either in terms of index points, or it will deliver in terms of, as indeed was on the ES, it was on a setting of 7, I think, which is a 1.75, so 7 ticks in other words. When you're trading on an index like this, this is 14, so it's 14 index points on the YM, and so on and so forth. If you're on oil, it'll be quoted in cents. If you're on gold, gold would be dollars per ounce. It just automatically calculates and delivers according to the instrument you've attached it to. And of course, you can select the time that you wish. Normally I go for a minute, but sometimes if the market's a little bit slower, I go down to a 2 or a 3 minute. And the Renko is just confirming you get a sense of speed on the Renko, as indeed you do on tick charts, because they are non-time based. So once that metric has been met, then the brick is formed, and the speed of delivery will be immediately obvious on the chart itself. You'll see the chart building in much more quickly because it's not governed by time. It's governed by another metric, which in this case is the number of index points. We're still trading inside the various volatility indicators. We're trading inside this one, and we're trading inside that one, and we're still at the volume point of control, and we're still trading inside the volatility indicator here as well. So there's very little movement at the moment. Let's just go back to the tick charts. Probably, I'm sure they're saying the same thing. Yeah, it's all pretty sluggish. Awful lot of red coming through, which is just telling us that the activity is dying all the time. What we want to see is green. We want to see really these markets moving on green, which is lots of activity, high levels of tick, and orange is really just the sort of average. So you really want to see the markets moving through green and orange most of the time. The red tends to come in very heavily, obviously, towards the end of the session when participants are closing up shop for the day. But really, on an intraday basis, it's not what you want to see because it represents higher risk. If you're trading with these showing red all the time, then the chances are the market is not going to go anywhere, or if it is, then it's probably going to be a trap move. It's just a question of waiting and being patient for the green areas to come through more regularly, coupled with the orange, to indicate the pickup in the tick activity. It's all very, very sluggish at the moment. Just see what's happening on the yen. It's kicked over on 5, but the Aussie is not following suit. The Aussie is diving as well. So in terms of the Aussie yen, that's going nowhere either. And the actual sentiment towards the yen is not particularly strong or weak, whichever way you look at it. Going to have a look at the indices. Probably going sideways as well. That's the yen. Congestion. Dollar's rolling over a little bit maybe off the bullish sentiment from the open. And that's the euro, which is going nowhere at the moment, going sideways. Doesn't necessarily mean that's going sideways across all pairs, but broadly it's just not going anywhere. Let's go back to the time-based charts again. The huge bricks. Let's close those down a little bit. There we go. That's it. There we are. And you just have to be patient, and you have to set your levels as to where you think you might want to get in if the market moves to a certain level. Let's put the 10-minute up for a moment. There we go. Taking a slightly slower, longer term perspective, then in terms of the YM, the questions you might ask yourself is, at what level would I be comfortable getting in? We're trading at 847 at the moment. We're trading in, relatively wide range here. We're talking about what? Let's have a look and move that out the way. 820 up to 880. So it's 60 odd points, which is worth having. You take 60 points out of $5 a point. I'll leave you to do the maths. It's quite nice. So there's plenty of range in here to make money. But do you want to be trading in here? Personally, no, I don't. I just want to wait until the market develops a trend in one direction or the other. I don't really care which direction it is because I have no bias. And that's the other thing. When you're trading some markets, particularly stocks, for example, whether you're trading an intraday basis or maybe slightly longer term, certainly not from an investment perspective, but from an investment perspective even, they always have a bias to the upside. It's inevitable. People always expect stock markets to rise, and that's what they're bought on the premise of, which is ironic when you see these pictures of the markets collapsing and traders with their heads in their hands. You'd think that nobody actually ever shorted those markets. And that's the kind of bias you have. The same is true of gold. In terms of trading indices, this is where we started. Anna and I started trading indices. This was our first entry into trading. And they're just great markets to trade because you have no bias at all. You don't care whether it goes up or whether it goes down on the day. You just want to be on the right side of it all the time. You have no interest in it being bullish or bearish. It's just, I want to be on the right side. And then it's just looking at the chart and which levels are going to dictate my decision making. Where does the market have to get to in order to make me feel comfortable? What level has to be breached for it to make me feel comfortable? And once that level's been breached, then what's likely to cause it to pause or to cause it to run into difficulty if it gets all the way back up here? For example, is this region here, which is relatively clear, and we've also got low volume in here. We're talking about 40 or 50 points here. So if we broke through that, fine, but then you've got to deal with the fact that you've got an awful lot of price congestion over here, and you've got more of it in layers up and down here, which you're always going to have somewhere or the other on the chart, but this is significant. So it's all a question of balanced decision making, but looking at the chart and using the chart to give you that key information about where to get in, what level you're going to get in, and does the market offer me sufficient potential as a return against the risk I'm going to put on the table. So back to the 3 for a minute. This level's coming into play again. This platform of support, which has pretty much held. It's been pierced on a couple of occasions, but the price has always closed back above it. It's when the price closes below and sufficiently below. And the question we always ask is, whenever we're talking about breakaway trading or moves from congestion, is, well, how far is far enough? And again, there's no rule book that says it has to be 5 points or 10 points, whatever it is. It's what looks right. It's not just cleared. It's cleared enough to give you a sense of comfort that it looks as though this market is breaking away, and the volume associated with it is certainly confirming that particular view. I mean, where the market is now, is that enough? No, it's not. I'd certainly like to see it below this one, maybe a little bit lower than that, even on the slightly slower time frame charts. And of course, in this case, we're looking also to clear this the bottom of this candle here. and even down to the 30 here. We're looking for a clearance away from this region below, I don't know, 25.810, something like that. And you can see the depth of the price action that's, all over here. Always look to the left of the chart, what is going on. You've got all this congestion here. And if it's going to move through there, and that's also highlighted on the accumulation distribution here with this platform in place here that's just starting to, if the candle closes below that, then it's going to act as resistance overhead to any move lower. And as always, context. Where are we on the day? We've got this strong region up here, which is acting as resistance. Certainly did yesterday, certainly is again today, pushing the market down. Very light volume overhead. So from a longer term perspective, if we get through this region here, then we've got a nice solid platform in below and fairly light volume overhead. Not gone through on that occasion. Again, it's another one that's just pierced, come back again and closed above it. And now we're going to go back up onto the VPOC again. And this is just building ever stronger layers. The indicators will be working in the background, and once these levels are tested and retested all the time, it's just constantly rebuilding these regions and just telling us they're even stronger than they were when we started. And the little numbers down here just tell you how many times that area has been tested or retested, either from below or above. Probably not very clear on your screen, apologies, but that's what that number dictates. But it also reflects the fact that the lines are then graphically presented as slightly wider. So the greater the number of tests, this is a 6, this is an 8. So this is a pretty decent, dense region of price support or price resistance as it's approached. Let's just see what's happening on the tick count. Won't be very high. No, still pretty sluggish. This is on 5, very, very sluggish on 5. Put that up full size there. You can see how low the tick activity is in this region. This was the tick activity at the start, which is what you always see at the open. This is Globex. This is 2:30 UK time. This is when both markets are running together. And this is when you get the surge in activity, and you can see how low it is right now. And now you get a sense of speed coming into the market. You can sense it, you can see it. You can see it on the Renko, and you can start to see it on the tick charts as well. Just go back to the time, just see what's going on there.
Do you want to answer your question about the volume?
Yeah. Do you ever use something like a moving average or a Centerline on the volume to use as a gauge to judge the size of the volume bars? Personally, we on MT4 we do have a MT4, MT5. There is a sort of average line which is calculated based off the daily volumes, but I must confess we don't have it on Ninja, and it's really just a question of the.
It's a standard indicator.
Yeah, because it's a standard indicator. The important thing is always to remember that if we take the 3-minute, for example, just as an example, is always to compare like with like. This is the cutoff point here. This is the session crossover. So this was through from Far Eastern Asia, through London, Globex trading, in other words, the electronic contract trading on its own. Then at 2:30, the physical exchange opens and you get the surge in volume. So in terms of comparing volume, we can compare in here because we're comparing like with like. Equally, we can compare out here because we're comparing like with like on Globex. What you can't do is you can't compare this with that. It doesn't work because you're not comparing like with like. You're comparing two different markets running, not different markets, but you're comparing two different session periods when the activity is automatically and dramatically higher because you're running two markets in parallel as opposed to running one here. That doesn't invalidate volume, because I can assure you when you're running on Globex, it works perfectly fine. It's just that the measure, if you will, of height of a volume bar is dramatically lower, purely because there are fewer participants, because it's running an electronic market when the physical markets are not open. So that's the most important thing I would say in terms of gauging volume. And thereafter, what you're doing the whole time is you are looking for benchmark candles and volume. So when you're looking at a chart and you're comparing like with like, you're constantly on the search for anomalies where you might see a lot of price action, but actually relatively light volume. But what you're also looking for is candles where you have a very simple candle shape, for example, no wicks, so you'd have a candle body and very light wick, small wicks top and bottom, and you're looking at that volume, and then perhaps the candle that is under consideration, you're looking at that in the context of what you might consider is your benchmark candle. So is what I'm looking at now, does it look right? Does it look sensible? For example, if you had a decent widespread up candle with decent volume, and you're looking at a similar candle, similar sort of price spread candle, but the volume is half, what's that telling you? Against your benchmark candle, it's telling you it's an anomaly, because all things being equal, you should have the same volume on that candle price action as you have on your benchmark candle price action. And if you haven't, there's a reason for it. Now, provided you're in the same session, then that's a perfectly valid comparison to draw, and the conclusion would be that there is some sort of trap going on because the market's gone up, but it hasn't gone up on sufficient volume. Therefore, what you expect to see is at the very least a possible pause point, and maybe a reversal, because the market makers, the big operators, have withdrawn. The market's just gone up on light volume, and therefore the expectation is it's not going to go much further. That's really how you do the analysis, and not so much on just having some sort of mathematical guide as to what's high, medium, or low, because it will vary from market to market the whole time, of course, as well, depending on whether you're looking at cash markets with real volume, whether you're looking at futures volume, whether you look at tick activity, tick volume, whatever it may be. I hope that answers that one for you. And we continue sideways. And in a way, it's a good lesson, because it's very easy to, we were talking about FOMO this morning in the Forex session, and jumping in on a market, particularly when you've been through one of these phases of price action, it's so easy. The market suddenly jumps for whatever reason, and because you've sat through this for what's an hour now, hour and a half, whatever it may be, the market moves dramatically. You jump in because you want some price action, you want to be trading, you don't want to be sitting here watching the screen all day long and nothing happening, and you're doing nothing. It's hard. It's not easy, because as a trader, your mindset is to make money and be doing something. And if you're not doing something, that tends to irk somewhat, and you tend to become bored, and then you'll jump in and you'll take risks, and it's just patience. It's hard. It's very hard. But all the signals are there. It's telling you right now, don't do anything. Just do not do anything. And it's also, in some ways, it's harder when you're trading one instrument. If you're an index trader, all right, you've got three choices. If you're a US trader, we primarily traded the FTSE 100, maybe you trade the DAX, whatever. But in essence, realistically, you tend to stick to one or two that you're comfortable with. So from the US perspective, it would probably be these three, maybe the Russell. But that's really it. And if they're all going in the same direction, then you're really stuck for choice. I'm not suggesting that you trade other markets because there's nothing happening here, but it's always an issue if you are going to be specific, if you're going to concentrate and focus on one particular market. So again, there are pros and cons of everything, but just be aware of the fact that if that's what you're doing, then you've got to be aware of the fact you're going to have to sit through days like this. There'll be other days when the market's wonderful and it's just like falling off a log making money. But in days like this, it's hard, and the hardest thing is patience. The pivots too are just confirming everything. They're just creating those levels, those regions of price support and price resistance. They're just telling you the market's in congestion right now, but they're also giving you helpful levels again to define this level here. You know, you've got these pivots here. We've had 2 tests of that downside region. That's quite a decent level to consider as a getting in point should the market break to the downside. Lots of wicks to the top side, trying to rally, fall back, trying to rally, fall back. Last one, trying to rally, falls back again.
Two other questions.
Yep. Sorry, I tend to have my chat box closed.
On the benchmark candle, it's in the book.
Is it? Yes. Yeah. How do you establish a benchmark candle? Well, you look at the chart, and it's also explained in the VPA book as well in detail as to in the examples book. There are a lot of examples with how to select that benchmark candle, but it's very much looking at the chart. So the important thing is that you, in choosing those benchmark candles, you do it in the same session, so you're comparing like with like. You cannot go to, for example, to a 4-hour chart or an 8-hour chart and compare candles one with another. If you're going to do that, you've got to hop over 2 periods, for example, and compare a candle that's maybe the previous day with a candle you're looking at. So it's all about comparing and using a benchmark candle in the same session. The benchmark candle can be anything. It can be a wide spread, it could be a narrow spread, it could be anything. It just gives you that sense of what is high, medium, or low, and whether the candle that you're looking at right now is in line with your chosen benchmark. And your benchmark can change all the time. It doesn't have to be one. You can have 2 or 3, or as many as you like. Lisa, do you trade every day? Yes, we do. We try to trade every day. Sometimes we don't, mainly because of personal commitments to other things and all the rest of it. But yes, we do. And we always have tried to, ever since we started. We're always aware of what's going on in the markets, even when we're not trading physically. So we're never out of touch. And we do that because we enjoy it. It's just something we enjoy doing and always have done. And I guess we were very lucky we started with volume. A lot of traders don't. Let's just have a look and see what's happening on the CSI. I suspect probably not a lot. No, it's flat. It's flat on 15, so it's tried to. There's been a little bit of selling, but very, very minor. It's flat. The Aussie's still selling off. Over on 5, yeah, the selling's stopped. It's we're back in buying the yen. Let's have a quick look at the indices. Or the currency indices, rather. That's where we are on the yen. It's clawing its way back up again. But even that, not terribly strong. Dollar's having a decent rally. And the euro is still going sideways.
Good for me then.
Yes, good for you. Let's just head back. There we go. So there we are. I'm going to pass back to Anna because at the moment, for the time being, there's not a lot happening. The platform of support is still holding. You can see it holding here. It's getting stronger all the time, but we're still trading around the volume point of control. We're trying to break through this region now. Maybe we'll see a little bit of an uptick. We've got the trend monitors actually transitioned there. So there's a slight, there's a slight move to, well, maybe the market isn't going to fall out of bed now, and we could see a minor reversal to recover. So there we go. And we just have to be patient, set our levels, and wait for them to be achieved, and then make a decision accordingly. I'm going to pass back to Anna.
Should be able to see my screen. I've been watching the YM and looking at various headlines and what have you. And I've actually taken all the other indicators off for the time being on this chart. All I've got is the VPOC, and what it tells me is this is a really strong level of resistance that it's just got to get through, and it's frustrating. It is really frustrating. But as a day trader, you know, we have just got to be able to manage the emotions that the charts can trigger in us, and one of the most frustrating frustration is one of the emotions that we have to be able to manage. But if we understand what we're looking at on the chart, I mean, this is a long period of congestion. This is only a 3-minute chart. Sorry, hold on a second. I do apologise. No, so I had to get rid of a call from Italy. I'll deal with it later. Right, congestion. Yes, congestion phases, but that's where trends are, as we say, that's where trends are born. And what we also need to be aware of at this, obviously, is when we see the price attempting to move away, you know, is it supported by decent volume? You know, what are we looking at? Well, we had, you know, we had this candle here when we looked at this hammer candle, which was a reasonable amount of volume, and it did manage to push the price up. And we said, and we get terribly excited with deep, you know, hammers with deep wicks, because you think, yep, plenty of price support, very nice volume underneath it. It did push it up, but, you know, and then it sort of, this candle then came in, less volume than there. Then we had a down candle, and then we had two, well, sort of more dojis than anything else, but, you know, green, but the volume is falling away. You know, it's basically, there's not enough there. Sorry, I can pass over to you, David. It's my fault. I should turn the phone off. That would be much more sensible. All right, here we are. Where are we? Back here, waiting to see what happens. And the last 3 candles that we've had here, we've had an up candle followed by a third, wicks to the top. But look at the volume. It's, you know, this is the we're in the heart. You know, we're reaching hugely a deep session of deep liquidity. All the traders are out there at the moment, and yet, you know, it cannot seem to come out of this congestion, and it is being verified, confirmed by the lack of participation. Prices, if you like, being, you know, marked up, moving up, but it's not supported by volume. Price needs to be supported by volume on as it goes up, and also on the way down. And now we've got a little down candle forming. We've also got this strong resistance here, this red line, the hatch line. And as David said, with this indicator, you can see it better on the when it's applied to a Renko chart, but you can actually see the numbers increase as a level is attested time and time again. And the more time it is tested, either from above or below, it then makes that level stronger. So therefore, you're going to need even more volume to be able to push through it. And in fact, we've now had a pivot. We've got a pivot high across here. We've got a pivot low. So we know the range that we are in. As I said, you know, frustration, and we've got the VPOC bang in the middle of this channel of a price action. And it is, I'm afraid, patient. There is no other word that I can offer you at the moment. I've got the yen index here. I've actually put it up to a 2-minute chart, and in fact, with the yen rising again, that's not going to giving me an awful lot of confidence that you know, the market is looking to move higher. The yen is being bought in the market, so you know, it's risk off. And I've got the yen. What I've actually done on the CSI, I've actually put the dollar and the yen. The dollar yen is either something like the Aussie yen or the dollar yen. You need to see what is happening there. With the yen, you've got the yen buying. At the moment, they're both going up, so they're probably in congestion as well, but I'm more interested in what the yen is doing. And if I see strong buying of the yen coming in, well, as I said, that is if I were long, or by looking to take a trade to the long side, then that would not fill me with an awful lot of confidence. Is there anything you want to add to that, David? On that, you've got the same chart as I have anyway. As I said, but as we see here, yes, we do see the yen rising. We have this down candle. Again, not a huge amount under there. That has the next candle that's formed. We have to see rising volume, and we have to see a break either to the top or the bottom of this range before we have a firm. Oh, we need to see a tweet from Twitter in chief. Yes, absolutely, Sam. You couldn't have put it. I couldn't have put it better myself. Right. I think we'll leave it there. As I said, I'm certainly not going to make any, make any call as where I think this is going to go. I can only say you just, in this case, it really is a case of watching and watching out for the headlines, see what's what is going to happen with regard to the US and China, what is happening on the deal or not, and we will see, and the market will react accordingly. The Fed is on the sidelines for the time being, so it really is all politics at the moment. So going back to where we were, here we are. These are just my headlines coming in from Talking Forex. Although it's Forex, it does cover other markets as well. I usually pop over to Forex Live. Just some comments there that I think they don't know any more than we do. We're looking at the same charts here, and then I hop over to investing.com. Let's bring it up to date. The ubiquitous. Here we are, hand in front of the map. I mean, clearly a stock investor, because hey, if you're a trader, as long as you're on the right side of the market, you don't really care whether it goes up or down. Fine. All I can say finally is, just very quickly, the tools you've been looking at, as we said, are from what we call the Essentials package. Ninja Trader, they actually, if you bought them individually, they would all the total cost individually is $1,400, but we actually reduced them down to $749. You can find more details of the indicators at quantumtrading.com. Just a click on the Ninja Trader icon that you see here. There's all the support videos, support pages about the individual indicators, and you'll also find the price of the individual, because you can buy them individually. You don't have to buy the whole package. In fact, you can buy one, the essentials, or the complete pack. The complete package includes the indicators for Forex. So we have a currency dashboard, and we have the indices as well. You have 24/7 support. All upgrades to the indicators are free. If you invest in the complete package, not the essentials, you receive all future indicators for free. So you just pay us once, and that's it, and it's all covered with a 7-day money back guarantee. Can also pay on what we call the easy payment plan, which is basically spread over 3 months. If you want more information, you can either email me, Anna at annacooling.com, helpdesk at Quantum Trading, or you can email David at quantumtrading.com. And finally, this is my site. You can find details of all the books, and as I said, you can catch up on my analysis and my views of what I think is happening. I tend to focus on the indices. I write a lot about gold because we trade. We have been trading gold, not trading it recently. It's quite amusing actually. I think a few years ago we were actually in some trades, and we forgot that you take delivery, don't you, David, of the actual metal. And we went to Italy traveling, and we almost it was good. I mean, we've ended up with some gold, but we managed to stop that in time and just and took the cash instead. So and obviously Forex as well. Thank you so much for coming along. As I said earlier, we are now back on a regular schedule. So it's Tuesdays and Thursdays, and as I said, so I hope you can come along. We will see you on Tuesday. Enjoy the rest of the trading session. Enjoy the rest of the week. Take care. There's also, you know, when things are like this in the market and it's very, very, you know, things like going nowhere, eventually something will happen. And, you know, the longer it goes on in this sort of quiet congestion phases, usually the more spectacular the move that, you know, that results as it were. So just be aware and take care, and we will catch you next time. And David is waving goodbye as well.